Dear students, we are going to do a new module, module 13. It's about exempted incomes. Exempted incomes in income tax is given under section 10. So here you have to remember, this is an important question. They will ask for as a theory question. What are the exempted incomes? So section B, usually we used to ask this question. So here, if you classify the income, classification of income, we can divide it into three headings. One is income forming part of total income, fully taxable. Fully taxable. Say for example, the salary I receive, the dividend I receive, the royalty I receive, fully taxable. Second is rebatable income. Rebatable income. Third is exempted income. So this module we are going to talk about exempted income. I am going to list then exempted incomes. So you have to remember that exempted income, I am going to give the list under section 10. This list is not complete, it's a long list, but whichever is important from your examination point of view, I am explaining. Agricultural income from land situated in India. So within the geographical boundaries of India, agricultural income is exempted. Now second point is income received from a co-partner from a Hindu undivided family or a chief. Who is a co-partner? Any male member, any member born in the Hindu undivided family is a co-partner. So here it is exempted because as HUF they are paying tax. Again, if co-partners are paying tax for their share of income, it will be double taxation. In our income tax rules, there is no double taxation. So co-partners' income received from HUF is exempted. Third point is share of income from a partnership firm. As partnership firm, they are paying tax. Share of income is not taxable from a partnership firm. But salary, commission, everything will be taxable. Same rule. As partnership, they are paying the tax. After tax, they are dividing it among partners. So to avoid double taxation, share of profit from a partnership firm is not taxable. Interest paid to non-resident. So bank interest paid to non-resident. Next is interest to non-resident external account. Non-residents can maintain two types of bank accounts, one in Indian currency, one in foreign currency. So if they are keeping in foreign currency, the interest income is exempted. Now, remuneration received by an individual who is not a citizen of India. If he is an NRI. So many cases in the incidence of tax, we have learned that NRIs will get special status. Most of the incomes are not taxable. Remuneration received by an ambassador or other officials of the embassy. So ambassadors, IFS, those who cleared Indian Foreign Service or they are working in embassy, it will be exempted. Then salary received by an employee of a foreign ship, that will be exempted. Then perquisites and allowances paid by government to its employees serving outside India. In other countries if they are serving, it's exempted. Any remuneration or fees received by a consultant from an international organization, IMF, World Bank, World Health Organization, it's exempted. Death cum retirement gratuity paid to government employees, exempted. Commuted value of pension for government employees, exempted. Amount received as leave encashment on retirement. That government officials got that earned leave concept is there. In the salary chapter, I have to explain it in detail. When we can encash that accumulated leave at the time of retirement. While in service, if you get it, it will be exempted, or if you encash that, it will be taxable. After retirement, if you get it, it's exempted. Now, payment received under Bhopal Gas Leak Disaster Act 1985. It was considered as a national disaster. It was declared. So that compensation whoever received, it will be exempted. Compensation received by legal heirs on account of any disaster from central or state government or local authority. Any calamity of serious nature, central government will decide whether it has to be declared as a national calamity. Then they will decide the compensation. If it's declared as a national calamity, it will be exempted. Any amount received from a life insurance policy at the time of maturity. We will all join life insurance because to protect our life, plus it's a compulsory savings. After the maturity amount, we will get at the term of the insurance policy. That amount will be exempted. Now, retirement compensation from a public sector company or any other company. If you are getting any retirement compensation, it will be exempted. So this is what I wanted to explain in this module. Happy learning. Thank you.